Time now for an in-depth look at the global markets this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on.
Good afternoon, Devin.
Well, the countries of the G20, which includes Korea, have signed to work towards a global standard when it comes to corporate taxation. That would set a minimum rate for companies. Certain countries have set exceptionally low rates, some say unfairly, to attract investment. So this is one of the main reasons they're doing this. Tell us about this move by the G20, Professor.
In 2017, President Trump cut maximum corporate tax rate from 35% to 21% to induce U.S. corporations' domestic investment. And recently, to President Biden, it became very important to find another tax revenue to finance his stimulus package of $3 trillion. So President Biden has decided to recover maximum corporate tax rate up to 28% from previous 21%. But here comes another concern of U.S. government that higher corporation tax derives U.S. corporation out to foreign countries where tax rate is lower. So U.S. government hopes to agree on a minimum corporation tax rate, at least 21% level with 20 leading economies. Since all major economies are experiencing the same problem, negotiations on global minimum tax rate can succeed.
It would be an extraordinary thing if it did succeed. We'll have to keep an eye on that. And now, according to the latest minutes from the Fed meeting, Professor, officials think the U.S. is looking at its strongest growth in 40 years, thanks in part to the Biden stimulus package, which they admit was bigger than they expected. And despite this positive outlook, Fed officials are still backing the dovish position of Chairman Powell. What do you make of these minutes from the Fed?
In the last FOMC meeting, U.S. Fed raised this year's U.S. economic growth forecast from previous 4.2% to 6.5%. And other international organizations like IMF and OECD agree on 6% level U.S. economic growth for this year. According to recently released minutes of last FOMC meeting, Fed officials have concluded that there is no urgency to pair monetary policy support, even with intensifying inflation pressure. All these together indicate zero key interest rate policy of the U.S. Fed will be continued at least until the end of this year.
And now stocks in New York were mixed overnight on those issues and the Biden administration's spending plans. The S&P and the Dow up slightly. Tech shares on the Nasdaq a little lower. What's the story in the global markets?
Yesterday's U.S. market is pretty much affected by minutes of last FOMC meeting. There were both signs of raising interest rate and continuing zero interest rate. As a result, U.S. market is mixed between Dow Jones and Nasdaq. Dow Jones and S&P 500 had 0.1% return, but Nasdaq dropped by 0.1% yesterday. Other major markets were also mixed over Asian markets and European markets. Shanghai, Hong Kong, and London had a positive return yesterday, but Tokyo, Paris, and Frankfurt had negative returns.
And Korean stocks have seen gains lately, too. That continued today, though the KOSPI was up and down. It closed above 31.41. The KOSDAQ with a bigger gain. Tell us about the local markets.
In domestic market today, KOSPI had a 0.2% return and KOSDAQ has 0.9% return. Domestic markets rise is led by individual investors and foreign investors. Particularly until today, there was 6 straight days foreign investors net purchase in KOSPI market. It is a positive sign to Korean market's profitability in the future.
And now, speaking of profitability, let's look at Samsung. Its chip plant in Austin, Texas, of course, was hit by the massive power outages last month from the winter storm. Operations are now getting back to normal, though. Now, the company in the first quarter is estimating a surge in profits and revenues, and the chip sector is expected to improve in the second quarter. Tell us about the situation with Samsung and what you see ahead for the sector in Q2.
Samsung Electronics, the world's largest smartphone and memory chip maker, forecast operating profit of 9.3 trillion won, or $8.3 billion for the first quarter. Samsung Electronics said it expects a 44% increase in operating profit for the first quarter of this year, topping expectations during a global shortage of semiconductors and despite shutdowns of some U.S. chip production facilities. Actually, U.S. Biden administration is expected to meet later this month with chip makers with Samsung Electronics a likely participant to boost their chip production during global shortage. About $50 billion will go toward the American semiconductor industry as a part of President Biden's $2.3 trillion infrastructure plan. This is a very powerful and positive factor for Samsung Electronics business for the near future.
Yeah, of course, it was big news a few weeks ago when Intel said it was going back into the chip manufacturing business, so that'll be interesting to watch. Professor, we'll have to leave it there for today. Thanks so much for sharing your insights with us.
Thank you very much.